What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, it is one of the more popular playlist videos, Crazy Bets from Wall Street Bets on Reddit. So if you're excited for today's video, make sure that you like the video, subscribe to the channel, and as always, turn on those notifications for all future uploads. Make sure that you are supporting the Fridge Financials channel so that way I can continue to produce these awesome videos for you. And again, the purpose of these videos, as per usual, is to bring financial education, not to, make fun of people, but just to make sure that we can use these trades that are both wins, that are losses, for financial education to help you achieve your financial goals. And at the time of recording this video, school is back in session, so the paychecks are flowing, but then that means the work schedule is a little bit more complicated. So we'll be doing a lot of content probably on the weekends to push out during the week for you guys to take a look at. So bear with me as I make this adjustment here as school is starting up again. But Fridge Financials is still going to be producing some content that hopefully you guys will enjoy. So we're into week 4 of the Wall Street Bets, Crazy Bets, wins and losses. And without further ado, we're going to be taking a look at the first one. Now, the first one that we have here is, this one was actually interesting. This guy made $9,000 on SPY call options that were same day expiration. And wouldn't you know it, he titles it, "Didn't Know About the Speech." The speech he's referring to is the Jackson Hole one from our very own Jerome Powell. Daddy Powell talking about what the rates are going to be looking like. We gave some really good indications that there is seemingly going to be a rate cut, most likely in September, based on the data on the labor market and everything else. And the markets absolutely loved what Jerome Powell said at Jackson Hole. But the point of this video here is things to keep in mind about. There's two things we keep in mind about. One, bookmark some sort of economic calendar. Whether it's, I use Bloomberg, other people use, Yahoo Finance does it too. Find yourself an economic calendar and make sure that you notify yourself when there's big things coming. Jackson Hole, Jerome Powell, is his biggest speech he gives in the entire calendar year. Very important. Everybody's listening, reading into the whole thing. So it is a very, very, very risky trade. Thankfully for this person right here, it did work out. But imagine if he said rate hikes or we're not cutting rates. This could have turned into a crazy loss. A crazy loss. And that's why we always say to make sure that you follow the educational calendars, make sure to date with, CPI data, FOMC meetings, PPI data, PCE data, jobless data, GDP numbers, Jackson Hole meetings. Make sure you are following a calendar that talks about the major economic moments for the U.S. It does make a difference. So thankfully, this person did get lucky. Even though he had no idea about the speech, this speech could have absolutely tanked his position, and he bought in $16,000 worth. So who knows what it could have been. Thankfully, he made it out alive. But things to keep in mind about, guys, as you're trading stocks, make sure you check in the calendar and that there's nothing crazy important that comes up. You never know. So again, find one that works for you and use it as I would advise you as not a financial advisor. On to the next one here. This person has two pictures here because I had to make a point to show both sides. Minus 80% all time, but plus 3,200% this week. And here's both screenshots here. And I was like, okay, yeah, sure. So the 3,200% a week is absolutely ridiculous. Like, he had like $100 to his name, it looks like, and now he's up to 4,400. But on the right side over here, he's still down 80%. He's down $18,000 here. So it's a good celebration or celebratory win here. But what happened here is the huge question. And, maybe this is the start of a turnaround pivot play, maybe. But this seems to me like a YOLO bet here because he had $100 to his name and he made $4,200 from it. My guess, probably bought into some kind of options with Jerome Powell and Jackson Hole on Friday, as we just talked about, and maybe that caused this to pump up. I have no idea. Maybe, who knows? But yeah, I don't know. It's the thing that we always talk about, where you gotta be very, very mindful of your investments, of your risk management strategies, and everything else. Because again, this is actually a good point, because I actually appreciate this person because they showed both sides. Okay, they showed both sides of their portfolio, not just the winning side. A lot of people will tend to show, hey, look at this winning position I had here. I made $4,000 here. But you don't see the behind the curtains of they're down 15,000, so you're still down a lot of money. So this person on Reddit, I actually really appreciate the transparency here, saying, "Hey, I did make 3,200 this week, but I'm still all-time down $18,000 here." So I actually respect this individual, and these are the people that I love to see, because hopefully this person rebounds it. And I can say I remember him being fully transparent. He had a huge loss. He brought it back to life, and now he's doing a lot better here. So shout out to this person here for being fully transparent, because you never know these days with social media, with AI, with people just taking it from other people. So I appreciate him showing this and being honest and upfront. That means a lot to me. On to the next one here. This one I did not quite understand, honestly. It's titled, "I Hate Cover Calls." First of all, why would you hate cover calls if you sell a cover call higher than your average cost, and you get paid for it? You're getting income from the premium, and if your shares get called away, you would hopefully have made money. Why would you do that? Right? So this person right here says, "I hate cover calls." Why would you hate making money? I don't know. 3,300 shares for Open Door, the meme stock. But the thing is that with Open Door, before we talk about this a little bit more, Open Door actually has a good chance of having a decent turnaround because of Jackson Hole. Jackson Hole made a huge difference to a company like Open Door, because again, Open Door does real estate. Rates are really high right now, so the housing market isn't in a good spot right now. When we start to get rate cuts, that makes hopefully housing maybe a little bit more affordable. People can borrow more money at lower rates and everything else. They can refinance potentially, and then go out and buy houses, and they could buy houses that are on inventory from Open Door. So Open Door, for example, is a company that's really going to benefit from having rate cuts, which is why I'm guessing they're up at over $5 a share. And so he hates it because he has these options here that go until next week, and Open Door's at $5, and he sold $3 options and $3.50 call options. Now, here's the thing to understand here. And I wonder if I don't know if I can do the math right away. I mean, I kind of can give you a rough estimate here, I guess. But like halfway between $3 and halfway, if he had 20 sells here and 20 sells here, his average selling of his share prices would be like $3.25. So it's probably a little less than $3.25, maybe like $3.20, maybe it's $3.13. I don't really know. But I'm sure the premiums were pretty okay here for Open Door here. So you still made some money. And again, Open Door is still considered a meme stock in this kind of market, as we know. So, I mean, what do you hate about it? Well, you get cash out of it. You're getting a premium from it, and you're out of the Open Door, meme stock. And what happens if it crashes down to, say, $3 next week? Then you're not going to hate it as much. So the fact that you hate cover calls means that you're not doing it right. You're getting your shares called away, hopefully at a profit. Again, I don't know what his break even is for these options combined, because I don't know how much the originals were costing. But again, the idea to keep in mind about is that I don't know. I don't get it why you would hate cover calls. Oh no, my shares are getting called away for a profit, and then I'm getting passive income from the premiums. Oh man, I hate making money. I mean, it's always that FOMO that I feel that people have, where they're like, oh my God, I could have just held it till 520 and made a lot more money. Yeah, you could have. But the covered calls also gives you downside protection. What if Open Door crashed down to $2 a share again? Then you still get your shares and you offset your cost base a little bit. So, I wouldn't say I hate covered calls. I like them. I get passive income from it. And if my shares are called away, oh no, profit, dang, Anyways, this person said Open Door, not selling till $500. Now, I don't know if he meant the share price to go to $500 or he meant the option contract to go to $500. I'm not really quite sure, because these are this is worth $135. Now it's worth $227 per contract. So I don't know either way, but I mean, dude, like you made $9,000 so far on this kind of play here. You made 68% of your market investment into this thing in a matter of, you open on the 19th, which was last week, and it goes till February. Like you've already made over half of the amount in like a couple days. I'm not saying close the whole thing. My non-financial advice here for this option would be to, set take profit limits, obviously, but to also, take some money off the table. Why not? You have 100 contracts here. There's nothing bad ever with offloading some of your position. If he has 100 contracts here, offload half of them. You secure the profit for those 50 contracts, and you let the other 50 ride out. Totally cool. Why not? Or, take out the $12,000-ish you put in initially, $13,000 you put in initially, and then let the rest of it ride out and see what happens. There's nothing wrong with doing that either, where you can take it and let it ride out. Because again, Open Door is a swinging, volatile stock. And that's not necessarily going to be something that's, it's not going to go straight up from here. And if this person thinks that, then he's going to mean for a rude awakening in the markets here. But you never know. Also, with Open Door pumping to $5 or so, you might be getting hit with people taking profit orders, people, you saw it. It ran up it was like a month ago, ran to like 497, and then it pulled right back down. People took their profits off the table, and this could be a very similar thing that happens right here. We obviously don't know. We can't predict it. But, I would say as a non-financial advisor, take some profits off the board. Why not? It's never bad to lock in those profits, especially on a stock like Open Door, But, shout out to you. Hopefully make some more money here in these call options. Fingers crossed for you as we move on to the next one. Towards a good run, life savings straight to zero. And this one hurts. This one honestly generally hurts. Down $101,000, 98% of his portfolio he's down in. This one hurts. This one is definitely like one of those, that's unbelievable that this is what happened here. I don't know how long he's had this position open for, but if it is true, and again, you don't know what people say on Wall Street Bets is obviously legit. Like he didn't show his bank statement or something like that, obviously, because that'd be super bad if you show your bank account and everything else. But if he did, in fact, put his life savings into here and it went straight to zero, this is why we always say to recommend diversifying portfolios and not just putting it all into one thing and think you're going to make it big on the trading aspect of things. Put into a high yield, put it into, a checking account to have your bills paid and stuff like that. Obviously, have your money in different spots, not just all into Robinhood, for example, because being down $101,000 is absolutely wild. You could have bought a house, you could have done who knows what, but we also don't know. Maybe this is his, maybe this was his quote unquote fun money. Maybe he's got like $10 million. That was his fun money. I have no idea. But if this is his life savings, that is very, very unfortunate. That's why we always say, hey, do not put all your eggs in one basket. Do not put all your money into one thing. Diversify. Next up, this one says, thank you, Jerome Powell. He had 650 SPY put options here. This is an example of saying, again, first of all, Jerome Powell is doing it based off of what he thinks is best for the U.S. economy. He's not looking at your portfolio and saying, haha, watch this. I'm going to say good afternoon. I'm going to crash the stock price. Like, he's not doing that. He's doing it out of the best of the U.S. economy. We have the labor market coming down here. Inflation is still sticking around here. So he's trying to think about ways in which he could try to hopefully create that soft landing situation still with everything going on. And, when you're holding stocks and you're holding options in plays that are shorter time frames comparatively, this one's December 31st, which is still a long ways away, but the expected move of SPY, I believe on yesterday, was about over 1%. So that's a huge move for SPY. And so the fact that you're holding these kind of trades here and you're banking on Jerome Powell to say the right things, it's very hard to predict what Jerome Powell will say. It's very hard to. Only he knows what he's going to say because he writes out the script, right? Only he knows what will be said. So the fact that, people will risk and bet money on it, especially a decent amount like this guy did, it seems like it's a 50-50 coin flip. You never know what happens with FOMC meetings with Jerome Powell or Jackson Hole. You never know. Same thing with earnings. Earnings could be knocked out of the park. They say guidance is lowered, and then it crashes the stock 15%. You just don't know. So that's why, again, playing these speeches are very, very volatile. They're very risky. So you have to be mindful of it. I would have maybe played an option where it covered both sides. If you had a lot of money to SPY puts here, maybe hedge it with, some call options potentially and try to diversify it that way. So that way, even if it's a loss, it's not a total loss. There's different ways you can hedge your portfolios to kind of cover both cases. So if you lose in one direction, it's not nearly as bad, So just something to keep in mind about as we move forward into these plays here. On to the next one. This one's another guy with having $0 in his bank account here because he put everything into FN. I don't know what FN is as a company. I have no idea. As you can see, 99.95% portfolio diversity in this one investment right here. Absolutely full ported it. And if it is all of his money in the bank account, God bless your soul. He can still sell covered calls. We can sell one covered call option if he wants to. But yeah, just another example of, again, putting money in different accounts, diversifying it. Don't do it like 15 bank accounts, but having, a high yield, having a checking, having, a regular savings maybe, and then having an investment accounts. Like those are the ones you want to try to have it like diversified. So that way, if stocks go down, you're not fully hit with this here. Because God only forbids, if FN goes down 10%, he's down a lot of money. And it just creates that like psychological factor of I gotta get it back. And it feeds into that gambling mentality for some people. So something to keep in mind about. Next up, how cooked am I? Palantir puts 146. Palantir has really sold off recently as of late. And the reason why that I brought this one up is not because I don't think Palantir is overvalued here, because, with the high PE ratio, it can't be considered to be like really overvalued and compared to other companies. But my major concern here, which again is if you're playing options, you got to put a longer date on it. You got to. You can't just put a couple days like he has done here. You can't just put a couple days on it from the 20th to the 22nd and hope that a big move is going to happen. And that's what's happening here. And he's down $6,000 here because even though Palantir moves down, it has to move down a lot. I'm talking a lot. From the 20th to the 22nd, it would need to move a lot. And that's the problem with options. Short-term option plays are very risky because you are looking for a dramatic move in a dramatic time period. And it's very hard to get timed right. If you put these Palantir options for like December, for like January of next year, you wouldn't lose as much money from decay. You also would probably be, I would guess, probably green on this one. It will cost you more money because it's a farther date, but you might be probably close to break even, maybe even green, because as the stock falls lower and lower and lower, and there's still a lot of time left baked into the contract, it becomes profitable early on, and then you start to really experience the decay towards the end of the option. I think this person here just got hit with a decay because, again, it's coming down, but just not enough. So be mindful of the strike prices of your expirations. Don't go short term. Look for the longer term ones. Leap options are very good options. If you're bullish on the stock, you can do leap put options, leap call options, whatever it is you want to do. But going farther out definitely makes a huge difference in my opinion. So yeah. On the next one, Target puts paid full pour Walmart calls, ? This is just like, I just made a crap ton of money on Target puts on earnings. Let me just put it into Walmart calls now. Like, dude, you made your money. You made your almost $3,000 here. Let's just calm down a little bit, right? And if he did, which I don't know if he did, I don't think he showed proof of it. If he did, he would have lost a lot of that money because Walmart had bad earnings, and it was down like 5% the morning of on Thursday, I believe. So if he took all his money and he full ported into Walmart calls, that wouldn't have been a good idea. So we didn't take that trade here. But again, when you make a successful trade, some people tend to jump into the next one. It's that dopamine hit. I got to make more. Oh, cool. I just made $3,000. Let me go jump in the next one. I'm going to make another $5,000 or whatever. And it's that dopamine hit. It's that adrenaline rush that you're getting. So when you hit a trade like this, close it and then be like, you know what? Let me analyze what I did here. I'll take my profits. Let me regroup and think about what my next play is going to be. Because Target was Tuesday, I believe, or maybe Wednesday. And then Walmart was like the same week, but like a day or two afterwards. I forgot what the actual dates were. But it's just something to keep in mind about, with these kind of plays here. So without further ado, moving on from that one, Intel always finds a way to love me. This one right here is crazy to me. He sold, so he has shares of Intel, I'm going to guess. He sold cover calls, 30 of them, 30 contracts of cover calls for $3 per contract. It's like no return. No return whatsoever. So he made $90, but he's got 3,000 shares of Intel at a certain strike price here. I mean, I don't know what his average cost basis is of the actual shares he has to cover this. So maybe he's starting to make some good money here. But like selling a cover call for $3 a contract to me is crazy. And again, as you can tell, selling it for that kind of play here, you're squeezing pennies out of it. And then all it took was two things. You had Trump talking about buying a stake in Intel. And then you had another major company, another major firm that bought Intel. I can tell you what it is really quick. I want to say it was SoftBank, I'm pretty sure. It was one of those banks, essentially, that we're looking at here. Let me tell you what it was. I'm almost certain it was SoftBank, but I don't want to give you guys any wrong information here. SoftBank. SoftBank put $2 billion into Intel, apparently. So, that's two really bullish news catalysts there that push the stock high. And that's why he could have sold these 30 contracts for $63 each. But instead, he sold them for $3 each. So, don't try to sell cover calls for peanuts. Wait to get those big pumps in the stock market, in the stock that you get, up 1-2% a day, usually puts those premiums up a little bit higher, as we know. Moving on to the next one. Bullish IPO. Told you this would tank. I'm holding back till $37. And this is an example I brought into here only because, long story short, I did have the bullish IPO as well. I flipped it the same day. I made a lot of money. I sold that at like $100 a share, and right now it is down a lot. It's down at $64. IPOs can turn on a dime, which is why I say IPOs are risky. This is an example where it turns on a dime. It went from 118 at IPO in like the first 5 minutes to now down at $64. But this guy went bearish on it, bought some put options. It looks like it might work out pretty nicely. Who knows? But only time will tell. But again, IPOs, risky business. On the next one, this dude put $1.1 million into ASML. Okay. And he's up 24 grand. Man, I just put this in here just because I wanted to, honestly. I was like, dude, this is insane here. Sell some cover calls here, make some passive income, $1 million portfolio. These are motivational for me to be like, I want this. And what's crazy? Even with 1.1 million, it's not even full ported. He still has like 37% of his portfolio in something else. So, he's probably looking at close to a $2 million portfolio if I was to do a quick estimate. I don't know what the exact number is, but he's probably looking at like 1.8, 1.9 million potentially, I would guess, on this kind of position here in his portfolio. So, shout out to you. Hopefully you're already up 24 G's, basically made half my salary in a year. That's absolutely awesome. Hopefully it works out for you as we go. Moving on to the next one, another UNH person here that made a crap ton because Warren Buffett obviously disclosed with his filings that they bought a huge stake in UNH, and it caused the stock to pump. And this dude has now a portfolio worth $3.3 million. His daily profit and loss, $2.6 million. UNH, man, he definitely cashed in big. Good for you, man. Shout out to you. Again, this is the goals that I want. That's why I put these in here as well, because these are goals, right? Like having this is amazing. I cannot argue that one. Shout out to you, dude, whoever you are. $3 million is absolutely amazing. I went back. I'll go forward here. Last but not least, before we wrap it up here, we've got NVIDIA earnings here. Now he says, I'm ready for Wednesday for NVIDIA. He has 9,000 shares here, which is awesome. Which means he could sell, 90 cover calls if he wants to, like on Wednesday before their earnings report here comes out. But his average price right now is $89 per share. Total today's return is up 30 grand. Total return is down 16,000. It's not NVIDIA itself. It's I just realized this. It's a leveraged NVDL. Oh boy, never mind. For some reason, I thought he got into NVIDIA when it was down to like $90 a while ago, and he's been just holding it for a while. Okay, he put a lot of money into leveraged NVIDIA shares, which is like a 2x leverage. So if NVIDIA goes down 10%, this goes down 20%. Be careful with leveraged options and leveraged positions, leveraged ETFs, because just as much they can print, they could also take away just as fast. So be mindful of that one. Hopefully NVIDIA earnings go well for this gentleman here, or lady, whoever it is. Hopefully it goes well for whoever it is here. But again, leveraged ETFs are risky business, as we know. So that is it for Wall Street Bets this week. Thank you guys so much for watching. If you didn't make it this far in the video, make sure that you like the video, subscribe to the channel, turn on the notifications as per usual. Hopefully you guys are enjoying this content still, and I hope you're making money in the market some way, shape, or form. And as always, I will catch you guys in the next video.